to Stock Charts Trading. Today we're going to be talking about how to enter in on the moving average. And so you can see that we have a downtrend basically here, and this is the 100 moving average. We're on a 180 days intraday chart with 1 hour. You can see right here we have the 1 hour chart. And so again, we are underneath the moving average, and you know, as I know, when you're underneath the moving average, you take downtrends, and then here you pop above the moving average, so you'll start looking for uptrends. Now, one of the easiest and best ways that I like to use when I'm trading the moving average is a simple thing called trend lines. And so if you take the bottom, which is a low, and you pull it back, counter trend trade upward, again, we're in a downtrend, so you pull it up, you'll see my bottom of the box there. It's at 49, it's at 47, 42, 39, and finally 35. And if you keep on doing that from the low and then counter trend pull it back upward, and you create that 35 angle, and you do it again from this low and you create that 35-degree angle, and you do it again off of this low and you create that 35-degree angle. This 35-degree angle happens in the market over and over and over, and it is a fantastic entry point to get into a trade. Now, you already know, because of the moving average, that's a downtrend. But where do you get in on the downtrend? And here you would have been saved from entering in a bad trade because it never broke that 35-degree angle. And that would also be another indicator that, hey, price is moving higher. Right here, you would have had your highs, you had equal highs, you broke out, which you know that is a trend reversal. And then again, you have the confirmation with your 100-day moving average. Back to the entry points. So based on that 35-degree angle, every time price breaks out of that 35-degree angle, that is the time to get into the trade. And of course, we're trading to the downside because we know that the momentum is to the downside. So you have a temporary pullback, you have downside break. Even though this went higher, where did it go? It made a double top, right? It hit resistance and then fell back off. Again, price broke, but it went higher, came back into this gap fill right here, hit resistance, fell back off. Price right here, gap fill, back up. You put in your 35-degree angle. Price, maybe you got in here, price went back up, filled that gap, hit resistance, fell back off. Price again broke down below this 35% angle, went lower, gap fill, came back up, broke the angle again, price went down. Based off our range box tutorial, you'll see that from this break point down to this low, that is your support resistance. If you were to take and just duplicate this box every time you have a breakout, you'll see price goes down to the bottom of that box. Let's duplicate it again and see where price went to. It went down to the bottom of that box, reversaled back up. Where did price go? We're just duplicating this range box. Price broke out there. Price came all the way down to the bottom of the box. Let's duplicate it again. If we take that over here, why? Because we know price loves this range. And so yes, it went up, but then price came down and got to the bottom of this box, which is our target. Okay, let's see what happens on the next one. Price broke out and it came down to the bottom, which was our target. Does it do it again? Price broke down and again it hit the target. Let's see what happens the last time. Price went down and of course hit the target. So basically you have 1 hits the target, 2 hits the target, 3 hits the target, 4 hits the target, 5 hits the target, 6 hits the target, 7 hits the target, 8 hits the target. You have 8 trends on a down market, every one of them hitting the target. You're not greedy. You're not trying to get too much. Yes, you could have made a little bit more money from the bottom of this target box down a little bit lower. Yes, you could have made a little bit more money. You probably would have made more money because that would have dropped there. But yes, every time there was a little bit more money to made, but every time you hit the target. Look at how tight this number was right here. What if you had a lower target and then price shot back up? This would have been a loss, but it wasn't a loss. It was a win. So that's what I like. Don't be too greedy on your targets. Just set a consistent average that price moves in based off your highs and your lows. Create these boxes for targets, and you're going to have a win after win after win. Would you rather have a 90% wins at 100% profit, or would you want more losses? The more losses you are, it's harder to get your profit average up because of the losses. Less losses, smaller targets means more money in your pocket. So let's look at uptrend. We're above the 100-day moving average. So let's put in our trend lines at a 35% pullback. All right, so here we're going to find our high, and we'll basically pull back to a 35%. Boom. We have a high, pull back to 35%. We have a high, pull back to 35%. All right, so you can see as I identified 17 pullbacks off of the highs. Every time a 35% pullback, you have a breakout, uptrend, breakout, up. Every time price keeps going higher because of the breakout. Now look at here, price broke up, went higher, reached the target, but never went above this new trend line, which is indicating a huge pullback. And so you did not lose any money here because it kept you from taking that trade. And what do we know? Comes back down to the moving average. Now, just to be honest, these are 1 to 4 days, right? There's 4 days. Here you've got 5 days. Here you've got just 1 day. Over here, once you get the breakout, you have 2 days. So these are relatively quick entry points. You have 2 days, but you have a 3% up run on a 2-day entry point. Step 1, use a moving average to find trends. Step 2, find your highs, find your lows. Step 3, off those highs and lows, draw a 35% trend line. Step 4, once it breaks out of that trend line, enter into the trade. Step 5, find your range box target. Step 6, set in your stop loss. Try this 35-degree angle out, test it, see what results you get. Leave the comments down below.